So session three, Mo had told me that yeah, I think there was maybe a bit of energy towards this session. So starting to think about uh like what types of investment could you possibly consider for your organization, and then how strat strategic ways to start to understand the best fit investor or fundraising for your organization, and how to start to define. So that's what we'll be digging in today. Naya, like what you said, there is quite a bit of information. It's broken up with kind of theory, so me talking with conversation, so a bit of kind of discussion as well as an exercise as well. So hopefully that combination will help us chunk it down a little bit, and it'll not be too overwhelming. But I'll try to also keep it as digestible as possible, considering the timing. I definitely do feel that as well. I struggle at this time of night to consume information. So quick, I guess just a quick intro to me. So my name's Lee. This is me on the left-hand side with my son. He's now a little bit bigger than you see in that picture. So he's 2. His name's Oliver. The middle picture represents, I guess, just a little bit of my history. So my family run it's now a 4th generation family business that's been trading for 100 years, or just under 100 years, I think. It's a small kind of electrical chain in Scotland, and I think like the reason I mention that is I've kind of been brought up in like business has been normal, and I think that it inspired me to to move into become an entrepreneur myself. And I think a lot of lessons that I've learned from coming from a family business as well, which have been quite interesting. And then the image on the right is obviously I'm one of the 2 co-founders of Zebra Growth alongside Mo. I'm sure Mo has given the introduction to what we do, so I'll not dig into that. Um, and then what I thought I'd mention is just these 3 logos that you'll be able to see. Hopefully you can see them at the bottom of this slide. Are organizations that I've supported in my role at Zebra Growth with an investment kind of lens on. So Firstport is an organization that I sit on the board for. It's a social enterprise support organization that also manages a £15 million government fund. So they invest into social enterprises. So I've gained over the past few years in particular, I've gained quite a good insight into how organizations can raise investment, but also how investment committees are making decisions about the types of organizations that they invest in. So hopefully I can bring some of that experience to the discussion today. And then the 2 other logos are organizations that I've supported to raise investment over the past 12 months. So helping them to define their proposition, identify their ideal investor, and then start to close their investment round. So again, hopefully I can bring some of the insights that I've learned through those processes to this call. I would love to hear just a quick intro to Mo. Kind of gave me like some rough introductions to the businesses that were in the room, but I'd love to hear from everyone if it's okay. Just a quick sharing circle on who's on the call and what your business does, just to bring me up to speed. That would be super helpful. And I'll just open it up, whoever wants to unmute first.
Okay, I'll go first. So I'm Stacy. I'm Stacy. I can't see anything. I don't know if I can't see the slideshow. Is it still on or is off? I only can see photos. That's all I can see.
I think it's on. Can everyone else see it? The slideshow?
Oh, I don't know what happened to my thing. It gone mad.
Yeah, I can see it. I can see the slideshow.
maybe I'll have to come out and come back in again after this one. Yes, I'm Stacy. I'm a director for Stacy's Kitchen Limited, a Caribbean catering company, specializes in Caribbean cuisine. We've worked with corporate companies mostly like the Metropolitan, TMC Markets, Guys and St. Thomas's, charities. We specialize in all types of events, and we're looking to grow. That is about it.
Nice. Thank you. Nice to meet you.
I don't mind going next. Hi Lee, my name's Naya. I'm the founder of Tribe. I oh my gosh, normally I have this down pat, but it's been an extremely long day. So I'm the founder of Tribe, which is a parenting app. I aim to crush the invisible load that parents have. You have a child, so you should know exactly what I'm talking about. It's basically meant to be like a one-stop shop for everything and all information about your child. The app is designed to give you support, information, and also lots and lots for organization. Yeah, and that's me in a nutshell.
Nice. Quick question, Naya. What stage are you at? So like, what is the business model? Sorry,
Okay,
that's
so I
two
have
questions.
that's fine. I have an app. We're at MVP stage. We're currently on the Google Play Store and iOS. I'm interested in getting some revenue because now I've got my proof of concept and I need to build a really, really good app. My app is, to me, is pretty pants because it's very, very basic because I'm bootstrapping. But I want to create something that ticks all of the boxes.
Nice. Thanks.
I can go next. So I'm David. I'm the founder of BrokeHit. The problem we're solving is that filling forms suck. And then we built a platform for insurance brokers that automatically completes websites for them. And in terms of where we are right now, so we've actually been going for 4 years roughly now. We're currently a team of 5 people, and then we have roughly 15 customers using it. And then we've been bootstrapped mostly so far. And yeah, cool. And that's it.
Amazing. Thanks, David.
Okay, so here we go. So I'm Cecile. I'm the founder of the Epicerie. So the Epicerie is a curated exotic shop. So I started by selling exotic fruits, and then I'm going to develop more products with time. So I already have some clients, and yes.
Thank you. Nice to meet you, Cecile.
Nice to meet you.
Hello, I'm Max, the managing director of Coding Creed. It's a website agency that's been going 10 years. We specialize in website design, development, and website marketing. For specifically our clientele is specifically in technology, fintech, insurance, consulting. That's kind of space we operate.
Nice. Nice to meet you, Max. Nice to have someone from our marketing gang on the call.
Yeah,
so.
different field, totally different. You do way more to the nth degree. It's crazy.
That's nice though. It'd be good to chat a bit more. Yeah,
Yeah,
good
sure.
to have you here.
Thanks. That's me.
Tracy, are you able to share? No worries if not.
Hi guys, sorry, I've got my niece with me, so it was a bit loud. I'm Tracy, and I am a founder of a talent management company, and I'm looking to build out the tech side of things when it comes to sort of music, rights tools, and yeah.
Amazing. What Tracy, just quickly, what stage are you at? So how long have you been trading for?
The management side for a couple of years, but with the tech side, it's very new. So it's like early stages. Very early, yeah.
So nice to meet you.
Thanks.
Cool. I like a good, like a really interesting mix of businesses in different sectors, different stages of growth. I'm hearing a lot of bootstrapping with like brackets so far has been mentioned quite a lot. So there's maybe a bit of curiosity around raising investment as well. So yeah, exciting. We'll get stuck into it. So we did we started a little bit late. In all honesty, I'm torn whether we should do this or not, and maybe I'll put it to a vote. I don't want to skip it in case anyone is feeling like they need it. So there's two options here. Are we happy? Would you like to do the meditation and intention setting for the session? If you do feel like you want to do that, give me a thumbs up. I think you can do that via uh the thingy. If not, don't give me a thumbs up.
Can we
Does that
just
make sense?
can we just do
Yeah,
one? We don't have to do both, no? We can do
yeah. What one would you be drawn to?
uh,
Ooh.
maybe
I was
the
gonna say what Cecile was saying, but could we just do one but make them both in the same time? Because the intention is really good
yeah,
at
you
the
can.
same time. So could we just,
Yeah,
do the
yeah.
meditation and then end with it, end with the intention?
Yeah, that's a good shout. So what I'll do is I'll put the breathing meditation on. After the breathing meditation, I'll give everyone a minute rather than sharing the intentions. I'll give everyone a minute just to paste it in the comments if they want to. Cool. Right. Give me 2 seconds. Let me get on to the meditation. I'm just going to play it for a second, and can you let me know if the sound comes through? Okay, 2 seconds. Let me stop sharing. I'll need to reshare with the share sound. All right. So feel free to put your camera off if you feel more comfortable with that. Get relaxed. It's a nice short one, so 3 minutes. As it's going through, if an intention for the session emerges, then feel free to note it down, and we can share it in the chat afterwards. All right, I'll press play. Enjoy.
And rest your hands on your knees. Mindful breathing. Close your eyes and rest your hands on your knees. Bring your attention to the touch of your body on your seat. Feel the weight of your body on your chair or cushion. Make sure that your back is straight and that you're comfortable. Take a few deep breaths. While you're breathing deeply, relax your shoulders, your stomach muscles, the muscles in your face, your hands, and your legs. Let go of all the tightness in your body. Now bring your attention back to your breath. Notice what it feels like as it enters through your nose, goes down through your throat, filling your lungs, and back out through your nose. Notice your stomach and chest rise and fall each time you breathe in and each time you breathe out. And just allow your breathing to be natural and relaxed. Now bring your attention to the feeling of your breath in your nose. Feel your breath as it comes in and goes out. Just focus on this sensation, paying attention to each time you breathe in and each time you breathe out. As you inhale, maybe your breath feels cool. And as you exhale, maybe it feels a little warmer. When your mind wanders, or if you become distracted, just notice what's going on in your head, and then gently bring your attention back to your breath, going in and out. Focus on the feeling of your breath and allow thoughts and feelings to come and go in the background. Now gently bring your attention back to the touch of your body on your seat and open your eyes.
Okay, so I'll put the music on and I'll just give us a minute to note down our intention, and if you feel like you want to, then please share it in the chat for others to see. But I'll just put on this music for a minute and just have a think about what you would like to get out or bring to this session. Give me 2 seconds. I'm going to stop. Oh, sorry, I was on mute. Cool. Thanks for sharing those intentions. And I'm glad we chose to do that little 3-minute meditation. Definitely needed it. All right, so let's get straight into the session. So this first little bit, it's a bit of me talking, and then we're going to kind of round it off with a discussion. At any point, I don't know how you've managed this with Mo, but at any point, if you feel that you want to ask a clarification question or you've got something to contribute, like just unmute yourself and ask. And then we can have a conversation around that. If it takes too much time, we might decide to push it to some of the breaks or later on, but please do jump in whenever you've got a question. So, can everyone see my screen? Yeah, cool. So I guess the starting point for this is understanding that not all investors are the same. So what we're going to be speaking about today is the different types of investors or investment that you could attract for your organization. And really what we're trying to get to the crux of is how do you find the right fit? So not all investors will be the right fit for you as an individual and also your business. And each type of investor will have different needs, expectations, and things that they can bring to an organization. So choosing the right type of investor isn't just about raising that money, but it's also about finding a partner that like really does align with your vision and mission and long-term goals. So I guess like why is that important? So these are quite obvious, but I'll expand on them a little bit. So finding the right investor type there's a few different things, but alignment stands out for me. So making sure that the values and expectations of an investor actually align with what you're trying to achieve as a business. And that's really important because there's lots of horror stories that of businesses, small and big, that have raised investment where there's been a values mismatch or expectation mismatch, and ultimately that can put a lot of pressure on the founder, and often it can end in a really good way. So it's really important that there's that values alignment as well as a win-win partnership. So really thinking when you're thinking about raising investment, how can you create just a really good experience and relationship for both sides? And ideally, an investor will also come into the relationship with that mindset. So they're thinking about how do we make this a fair, reciprocal, win-win relationship. And I think if you see any warning signs about investors that are maybe not bringing that mindset to a conversation, then it's maybe worth pausing and just thinking a little bit deeper about that relationship. Tailored support. So a lot of investors and different types of investment can bring way more than just funding, and that often tends to be what becomes more important than just the funding that they bring is things like mentorship, industry connections, operational expertise, in different areas. So whether that's marketing, whether it's finance, whether it's operations, investors are usually really experienced and can bring a lot to the table. And then strategic growth. So the right investor can help accelerate growth in ways that maybe you couldn't do on your own. So maybe they can open certain doors, or maybe they have certain strategic partnerships that, or maybe they have certain, again, expertise that they can bring. So what I'm going to do is I'm just going to there's quite a lot of information on the next slides, but I'm going to kind of pull out the key points, and I'm just going to give a bit of an overview of, okay, what are the different investor types? Yeah. So first one, and you may be familiar with some of them or all of them. The second part of these, which is in about 3-4 slides time, is on alternative investment, and that's something that I wasn't necessarily aware of until the past few years. So that's different types of investment that aren't necessarily just about exchanging equity. And yeah, my eyes have been opened actually over the past few years in relation to that. So first one is angel investors. So these are typically high net worth individuals who have personal funds into startups and early stage organizations. Usually, not always, they bring early stage funding. That's not always the case. But somewhere between 10 to 500,000, not sure why this is in dollars, but is pretty standard for angel investment. They can also bring mentorship, advice, industry connections. They're usually looking for equity or potentially convertible debt in return for their investment. They are looking for high growth potential, but they're maybe not looking for like super quick growth that maybe some of the other ones that I'm going to talk through would be looking for. So maybe they're a bit more flexible and or have less demands around how quickly a business it grows after they invest in it. And then the benefits are great for startups at early stages that also need mentorship, and also ideal if you're looking for smaller funding rounds and personal relationships. The next one, Ajahn, maybe just pause there. Any questions on impact investors before we move on? Oh, sorry. Yeah, I was on the well spotted, Cecile. Angel investors before I move on. Okay, cool. So venture capital, VC, these are typically like collectives or pools of funds that invest in high growth startups or organizations, and typically these will be larger funding rounds, so potentially £1 million and up. They also bring extensive networks and resources, so they usually have a lot of support mechanisms that can help your business scale. And sometimes they'll come with things like accelerator programs that your business might need to go through as part of raising that venture capital. What they expect is typically they're really good negotiators, so they expect a significant equity stake and a seat on your board. They're looking for high growth, fast and high growth within usually short timeframes, so 5 to 10 years. And then they're looking for strong market potential and scalability. So you'll hear a lot of venture capital funds investing in emerging industries like AI or technology industries and stuff like that. But they also do invest in other non-tech areas as well. Benefits, so they're ideal for startups that are really ready to scale and want to do that quickly if that's their intention, and are looking for expertise, connections, and also potentially further investment rounds further down the line. And maybe just to build on that point, like I've definitely worked with organizations that have only wanted to raise just enough investment to get to profitability and like stability, and have been really intentional about not wanting to raise any more than they need. And usually that means that they're looking for angel investment rather than VC investment, because typically VCs will be the kind of, once you get on that cycle, like the expectation is that you will raise more to scale quicker. The next one is impact investors. So these can be angel and VC, so angel and venture capital, but typically they're working in spaces that are more focused on solving social and environmental problems. So they're looking for impact as well as financial outcomes. What they bring to the table is very similar to the other two ones we've mentioned, but they maybe have certain funds that are tailored to social or environmental businesses, and they also bring expertise and resources in the impact space, so the kind of social impact or environmental impact space. What they expect is this is slightly different to what the ones we've covered so far, is they're looking for financial metrics, but they're also looking for impact. So what is the positive impact that you're going to achieve, and how are you going to measure that? And they're also looking for transparency and alignment with their portfolio or their mission. And so I guess benefits, it's good for startups that are solving social or environmental challenges. It's definitely going to be easier to win this sort of impact investor over compared to a traditional investor if you have a strong social purpose or environmental purpose. And then, so next one is revenue-based financing. So these are typically lenders or organizations that will provide funding in exchange for a percentage of future revenue rather than equity. So it's maybe different than the traditional approach in the kind of startup space, but can be really effective. Like if a business is planning to get to generating revenue and becoming profitable relatively quickly, then this kind of arrangement can be great. So you can raise some money, but without having to give away an equity stake of your business. So what they bring is flexible repayments that are tied to your income. That's another benefit of this. So if your income drops in any particular months, depending on the agreement that you've got, your payments will reduce, or maybe you'll be able to get payment holidays. So it's really flexible. What they expect is they're obviously, because of the nature of this, they're looking for predictable revenue streams so that they can mitigate their risk a little bit, and they're looking for clear growth potential and benefits. So it's ideal for businesses that have good cash flow and good income, as well as if, as a founder, you're a little bit uncomfortable with giving away equity, then this is maybe a good option for you to consider. So those are kind of like the mainstream ones. I want to go over just 2 or 3 alternative ones. that have, as I mentioned before, have came onto my radar just through being in the social and environmental impact space over the past few years. So the first one is patient capital. This is basically it can be all of the ones we've already mentioned, probably typically not venture capital, but more likely angel investors and revenue-based finance could fall into this category. So it tends to be often individuals who are willing to accept lower returns over a longer time frame if a business is solving a problem that they feel passionate about. So this could be an individual or a group of investors that are intentionally designing their investment funds to be longer term and more patient. So what they bring to the table is flexible terms, longer repayment schedules, alignment with mission-driven businesses. I do have one example of this. So I won't mention them by name, but we have one of our clients and really good friends works in like the regenerative farming space. So they're trying to solve some of the challenges around like global food production and soil degradation, some big challenges around farming. And they, a few years ago, they were really close because they were running out of money to having to take venture capital funding and giving away equity. But right at the last minute, and believe it or not, they met, I guess, a wealthy individual at a party of all things, who had retired and felt really aligned to their mission and basically gave them a £10 million fund to be repaid over 50 years, 50 years, because he, I actually don't know if it was a he, they believed they believed so much in what the problem that organization was trying to solve. So there are like, it might feel like this isn't achievable, but these do happen. It does happen. What they expect is they're looking for like transparency. They're looking for a business that fits into their like potentially their lifestyle and what like their mission as an individual. And they're looking for transparency around how you report on things like impact. And then I guess like the benefit would be it allows time. So it gives a business time to grow in a sustainable way without the pressure of traditional finance, which is it needs to be paid back quickly. We need to grow quicker. Often that can be, well, one, it can lead to burnout for founders, and two, it can be quite restricting. Grants, I won't go into too much on this. So there's a few different places that organizations can look to for, it may be government agencies, it may be non-profit organizations or foundations that are offering grants for businesses that are solving particular challenges. Like one of those would maybe be, I don't know if you're familiar with Innovate UK. So there's usually lots of weird and wonderful kind of funds that come out of that I think it's government backed, that are kind of looking at different problems in different parts of the economy. And I know a lot of people that have been really successful with the likes of Innovate UK funds. It's just a case of keeping an eye out and being really patient until something comes up that's a good fit. But again, non-dilutive funding, so you don't need to give up equity. And then I guess probably just mention the benefits here. No repayment or equity loss makes it low risk. Yeah, I think that's pretty straightforward grants. Accelerators and incubators. So I'm sure if I was to hedge a bet, maybe one person at least has been through on this call, has been through some sort of accelerator or incubator. So I won't go into too much detail, but these are typically programs that either support a broad range of startups and entrepreneurs or are very specific to a particular industry. So there's a combination of different types of accelerators. And usually these come with like packaged support as well as access to funding, whether that's equity finance or whether it's grant funding, it varies. And typically these can be programs that last 3 to 6 months. So you can get money, but there's a commitment to take part in the accelerator program, which can, depending on your stage of growth, can be super, super valuable as well. Yep, that's about it. I won't go into too much more detail on accelerators. Crowdfunding, I find this one really interesting, particularly around businesses that are either B2C, so business to customer, or have a really strong social problem that they're tackling. I think there is, and it actually doesn't even necessarily need to be a social problem. Like if you're solving a problem with your business where people are really passionate about that problem and there's an opportunity to build a community around your product or solution, then crowdfunding might be a really good option. So basically, it means that lots of individuals can invest into your business. Either that can be equity investment or it can be kind of reward-based investment. So if it's early stage, you're developing a product or an app or whatever it is, people will invest and in return might get rewards like lifetime value, lifetime access or something like that. So there's a few different ways that you can approach it. My favorite benefit of crowdfunding is you not only get investment, but you get people to test your product, whether that's you're developing a MVP for the first time or you're looking, like, it gives you lots of willing participants to really help you shape your service or your product over time. Corporate innovation funding, this is less common. I think this is the second last one. Less common, but potentially large corporations that are large businesses that are looking to invest in startups to drive innovation. So, for example, if a big business it has a particular area they want to innovate in, and your business is solving that problem or is bringing a new perspective to the problem, then it might be that there's an opportunity for collaboration. They might be able to invest in your organization, or maybe even they might be able to acquire your business. So there's an opportunity definitely with big corporates. I'd say it's less common. And then the last one is friends and family. This is really common in early stage. So businesses or entrepreneurs that will do a friends and family round. So they'll have, if they've, got a hypothesis around a particular problem they're looking to solve, if they're really confident about being able to solve that problem, then it might be that getting backing or support from your kind of inner circle or close network could allow you to take those first steps. So it tends to be for the very early stages, and it can often act as a bridge to larger funding sources. And I think actually what's really common is angel investors will often ask, have you done a friends and family round? And they're usually asking that question. Now, obviously, not everyone has the ability to ask their friends and family, but they're asking that question to see, like, what risk have you taken? And that's often the mindset that angel investors will bring to this. So either friends and family, or have you had personal funds that you've been able to put into the business? Okay, bonus tip that I just wanted to share. Considered Capital, they're a friend of Mo and I's, Esme, who runs the organization. They are like, Esme runs a community and a lot of training programs and learning programs around how to access alternative funding. So she has a huge directory and ecosystem of like non-traditional funding, like some of the stuff we've covered. So patient capital, all of that sort of stuff. So I'd encourage you to note down the website or check out Considered Capital, because there's lots of free resources, and Esme is just a wonderful person. So hopefully she can help. All right, so I wanted to stop talking, first of all, and just pause there. There's a few questions that I'd love us to just have a bit of a conversation on. I don't think there's enough people to merit us breaking out. So I'd maybe just like to suggest that we do a bit of a sharing circle. So if anyone feels comfortable answering any of these questions and sharing with the group, I'll read out the questions quickly, and then I'll open up to everyone. So first one is, which type of investment aligns most with your own business and your stage of growth? Like, is there a particular one that you were like, aha, that feels right for me? What challenges or opportunities do you see in pursuing that type of investment? So is there any barriers that you see? And then is there a certain amount that you're thinking you would maybe need to raise for your organization, and why? So feel free to like pick one or all of these questions, unmute, and I'd love to do a bit of a sharing circle and just hear from you all for the next 10 minutes. Don't need to answer them all, just like if there's one you're drawn to, I'd love to hear. And this will, by the way, this will help me shape the rest of the session, because it'll give me a bit of an insight into where your head's at with investment.
I can go first. So, so probably for us, the type of investment that most aligns with our business is probably angel. And then in terms of what challenges that we see, right? I think the challenge is like more just finding angel investors and kind of like knowing where to find them or where they exist. And then yeah, so that was it.
Amazing. Thanks, David. By the way, I've got because you're in a similar sector to us, like I've got a bit of insight into like what investors look for from like more traditional service businesses. So hopefully I can share some of that over the next hour.
I don't mind going next. I'm definitely looking for angel investment. I think the VC world looks a little bit too controlled for me, and I still want to be my own boss in the immediate future. My challenges at the moment are justifying how much I need in order to what I want to spend on. So for instance, I want to get my app made, but I've got quotes ranging from 25K all the way up to 250K. So it's like understanding what is going to be the right fit for me to potentially ask for. And yeah, that's basically one of my main challenges, and getting all my paperwork in order, like just having everything exactly how you need it to present to somebody. So that's where I'm at.
Cool. And Naya, can I just ask, have you started that process? So have you started are you very clearly moving towards angel investment?
Yeah, I would say yeah and no. Because if I can I've applied for Innovation UK before, and I'm very privy to the grants and stuff that are out there, especially for tech businesses. So there's a part of me that is focusing on that as well, because I'd rather I'll just rather the free money before I have to go down the angel road. But I want to be ready for the angel, because if I find an angel that believes in my vision, then I believe that it could be quite beneficial to me for the partnerships and just all of that stuff as well. It's a little bit more than just the cash. This is my third accelerator, and I find that the power sometimes is not even in the money, it's in the intro and it's in the conversation that could propel your business forward. So I'm kind of really open to that as well. But yeah, as much free cash as I can get, that will make me really happy. But as I said, just trying to be ready for anything as well. I don't want to be faced with an opportunity and then have to say, well, actually, no, my ducks ain't in even a row, so I'm gonna have to circle back. So that's kind of like where I am.
Yeah, thank you. Anyone else willing to share?
All right, I will go next. I would say angel. I don't think I need a lot of capital, really, because if I get a certain amount of money, like maybe 5K, I think I would be able to help myself to navigate the rest of income. So it won't be a lot of money. Once I get like the links to the right corporate company, I can navigate, and from that money I make, then I'll be able to create more revenue for myself. And the challenges is finding angel. And I don't know, I think I heard before, I don't know if it's right, that some of these investors that you have to have a certain amount before they actually invest in your business. I don't know if that's true. So that maybe would be one of the challenges as well.
Yeah. Do you, Stacey, do you mean by that they want to see a certain amount of like traction or income, or is
I
that
think
what you
that
mean?
I think they probably was saying, if I heard properly, if I get it properly, was that this was like from programs that I've went to. This is not from actually investment. I think that they were saying they actually need to see that you have some money in the business itself before they actually expand on your business. But this is not actually coming from angel investment. I think like it's some program I went like from Foundervine.
Yeah.
And other
Yeah.
people were saying what their experiences with what they have get, but what they really were getting, I think there's 25K and those big money, but I don't need those big money, as I say.
Yeah.
Stacey, so if you're looking to only raise like 5,000, have you thought about going through everyone you know on your WhatsApp? So for me, so basically my background was like, we won an Innovate UK Smart Grant like 2 years ago, and then you have to raise a certain amount of money to match fund it. And then what I literally did was just message everyone I know, and I was like, hey, we won this grant, we're looking to raise X amount of money. And then I was able to get 27,000 just for my friends.
Is
So
it?
yeah, so for 5,000, I'll literally just recommend just go through your WhatsApp, everyone you know, just be like, hey, I'm launching this business. Like, you know, we've got like already this amount of traction. We're just looking for like any money you have, and then I think you're ready to make 5K in probably like a day or two.
I don't think I have that, but my dad gave me when I just started out, like a bit think 3K. And then I tried to expand on that. So with that amount of money that I had, I put it into the business, and then I did PPC advertisements, which enhanced the business. And then I wasn't getting back that returns on the PP advertisements. So I had to stop it. So then that 3K kind of melted away. You get what I mean? Yeah.
But I agree with what David's saying though, because it's like there is power in your story and there's power in people believing you in the beginning. It's the best time to ask for anything. When you're halfway through, it's harder because they're like, hey, are you even gonna make it? But in the beginning, it's so much easier to say, look, this is what I'm doing, this is where I'm going, and I need my community to take a risk on me. People will blow £100 in a day or a weekend or whatever. So I feel like it can be done. And when I was going for a bit of a tussle, because I'm bootstrapping, I could see my burn rate was about to be out. I created this thing called founding members and offered people a special thing I just came up with to hustle £1,000 that I needed to keep the lights on. And I only got like, I think about 20 people paid, and it covered me for a certain period of time. So sometimes when it's not that much money, if you can be a bit creative, there are ways to get people to buy in to help you get to the next level. So I kind of get what David's saying, even though sometimes we don't want to ask people, but if the pitch is right, people will put their hand in their pocket.
Yeah.
Yeah. Yeah, I agree. I love what I'm hearing here. Like I'm for at that kind of fundraise level, that kind of 5-ish K, like it's actually really hard for angels to invest at that level. So I'm leaning much more to, yeah, how could you bring your community around your business, or how could you potentially do a crowd fund? Like, I think there's definitely ways that you could be creative there. So hopefully the next few sessions, Stacey, will help you build out a bit of a plan around that. All right. Anyone else want to share? Anyone got some answers to these questions before we move on?
Okay, we go. So for me, the type of investment, I like the angel opportunities. I like the one with the less equity to give. So I'm not like, and also I think it's really important that if you have investor, they need to have like a balance between you and the investor. You need to be on the same level. And if you are not on the same level, then it's like it's when everything is going down. So you really need to be careful on that. So the challenge is like, where can you meet this kind of people, and how to convince them that your business is it's something they can put money on it.
Yeah.
Talking about that, I've been contacted a few months ago by some kind of investors. They were saying that they were interested in my company, blah, blah, blah. But I felt like it was really weird because I just started, and it was a really, I don't know, I had a meeting with them. I had a video call, and because I was at that time, I was really at the early stage. They were saying, oh, okay, come back to us when you will be more mature. But I felt like it was really weird the way they contacted me, because maybe you can answer to me, can they come like that out of the blue, or is it do you think it was a little bit fake, or I don't know?
Yeah, good question. I think I'd say that's very unusual, because typically investors have they're bombarded with applications for looking for investment. However, it's not unheard of. I think the only thing I would suggest is just doing some, if you do decide to go get back in touch with them, just doing some due diligence. Because you can do quite easily, you could do some due diligence on platforms like Crunchbase and figure out if these people are who they say they are. But yeah, I think your intuition is potentially right, so I would listen to it for sure.
Yes, yeah, it was a little bit weird. I didn't like also the approach, and yes, it was not right for me. So yeah, yeah, and for the amount, I feel like I don't have an exact amount for now. It's more than 50K.
Yeah.
But yes, I would say maybe around 50, 70, around that amount.
Okay, cool. I just want to just something that was mentioned. I can't remember if it was you, Cecile. What maybe just something I want to give a bit of insider knowledge on. So I mentioned at the start of the call that I sit on fundraising committees for a government fund that funds social enterprises. And one thing I've learned is that there is a lot of and sorry, just to explain, that fund is not equity, it's more patient revenue-based finance. So it's much more patient, it's based on your income. What I've learned over the past few years is there are actually quite a lot of these funds that exist. And they're trying really hard to give their money away. And often, because I had thought that, when I was on the other side looking for investment, I had thought that these businesses were trying not to give their money away. Sorry, these investors were trying not to give their money away. But what I've learned is actually they are so keen to spend their funds, but they just need organizations to hit certain criteria. They just need to show enough evidence that gives enough trust. So uh, I think some of the stuff we're going to go through today and on the next session will help you give you the tools to be able to give these investors confidence, because actually they want to give their money away, which was a big learning for me. Yeah.
Interesting. Thank you. Thank you for
No
sharing.
worries. Max, sorry, Max, anything you would like to add? Okay. No worries. So we'll we'll move on. So that was just a summary slide. So what we're going to chat about now is how basically, I think Cecile, you actually teed this up really nicely. I think it's almost like you had seen the rest of the slides, because you were asking how do we how do we convince these investors to give us money? So that's what we're going to cover in the next few slides. So how do we make our business model appealing to investors so that they're able to consider investing in our businesses? And the thing that we're going to cover is traction. So I'm sure you'll all be familiar with this term, which is really like the idea of how do we demonstrate that there is enough momentum with this business that we can give investors confidence? And there's different ways that you can show traction, which I'm going to cover. So this slide's called the essentials of a business model that investors trust, and there's a few different areas that I think you just need to be aware that investors are looking for. So the first one is revenue streams. So being able to really clearly define your business model and how you plan to generate income now, but also in the future, as well as how that ties into the overall problem that you're trying to solve. So that's the first thing. And then alongside that, cost management. So really clearly demonstrating that you are in control of how to manage the costs effectively in your business is definitely something that investors are evaluating your business on. Scalability. So to varying degrees, depending on what investment route you go down, they want to see a plan for how you're going to scale and grow over time. And then basically the goal. So, well, the goal is to convince investors that your model is both sustainable and impactful, particularly if you're looking at impact investors. So, yeah. So concept of traction. Traction is the measurable progress a company makes in growing its customer base, revenue, or market presence. And it's one of the most important indicators that demonstrates a company's momentum and provides validation. And this is a big word, validation, which we're going to dig into just now, that its product or service is resonating with its target audience. So there's a few different ways that you can showcase traction to investors. First one is like the first theme is credibility. So it doesn't always just need to be demonstrating revenue, and that's why I've broke it down into these different areas. So credibility could include things like testimonials, which actually tell a lot. Like testimonials, particularly if they're on third-party sites, allow investors to really read into what are customers actually saying about your business. And investors are really good at reading between the lines and spotting things like, what is the quality of the service? How sticky is this product or solution? How likely are the customers to stay customers? Things like that. But you could also look at things like press releases, reviews, quotes from user interviews, things like that. Then the kind of more financial stuff, so or not necessarily financial, but KPIs. So things like newsletter subscribers are really good indicators. Waiting lists, website traffic, number of people that have showed interest in your in engaging with your business. So depending on what your business is, it might be like partners that have showed intent to collaborate with you, or it might be customers that have booked discovery calls or demo calls or whatever that looks like for your business. And then obviously actual purchases. So if you can show revenue, investors are gonna really enjoy that. And then impact metrics. So things like what are the social, environmental, diversity, inclusion metrics, as well as how many partnerships have you established? So how rich is the ecosystem that surrounds your business? And more so, even if investors are not necessarily impact investors in the social and environmental space, there is more and more legislation and pressure for investors to take a more balanced view. So having things like impact reports or processes for diversity, inclusion, and governance structures are all things that will just add to your case and are super useful to have in place. the point I want to drive home here is that some of these are scalable and some are non-scalable, and this is a really important point. So, first one is non-scalable methods of demonstrating traction. So what I mean by non-scalable is that they're typically like personalized or really high effort strategies that help you build momentum in your business. And they're maybe not things that in the long term you can scale. So these might be things like one-on-one customer outreach. So you might be doing door-to-door sales, you might be doing cold outreach on LinkedIn, you might be attending events, you might be networking, you might be doing like really personalized demos or pitches. These things are good in the early stages, but not necessarily scalable. So the typical place you would use these to build traction and momentum would be early stage. So when you're starting to like, you need to prove demand and you're refining your product. So it might be when you're raising that first tranche of funding is when you need to be focused on these sort of things to demonstrate traction. And then the scalable methods. So these are things that as you start to grow, as you're maybe looking for larger investment rounds, what you're really looking to do here is build out ways to grow your business that are repeatable and ideally automated. So these can be things like digital advertising campaigns, partnerships with larger platforms, search engine optimization, might also be things like paid advertising as well. And then things like automated email marketing and things like that. These are good once you've validated that your product has got a good fit in the market and you're winning customers. And they're ideal for you starting to grow at a quicker rate. And I guess like where that sits, so where this idea of traction sits is within this model that's called product market fit. Is anyone familiar with product market fit, the term? Seeing some nods. Okay, cool. So I'll explain it really briefly. So in the most simple term, what it means is it's the intersection of the solution that your product is trying to solve and what the market needs. And the closer you can get them overlapping, the more resonance your product is going to have with customers, the more likely they are to buy it. And it's that creates this thing called product market fit. So it's in a organization where for the first time it starts to become a little bit easier to sell and it doesn't feel like you're having to put a huge amount of effort into acquiring customers or really feel like you're having to pull people towards your product or service. And where that kind of fits here is where I've got this circle. So and it's the validation phase. So product market fit typically happens around the point that you've won your early customers, you've iterated your product based on customer feedback enough that you've refined what you can offer your customers to a point that it just feels really valuable to them. And that, like, some businesses can achieve that really quickly, and other businesses it can take a huge amount of time. But I'd say this is like a really important phase in a business's growth that investors are looking really closely at. So you need to be able to communicate really confidently whether or not you think you've got product market fit. And in some cases, it's okay to not have product market fit when you're raising investment. But what you need to be able to communicate is that you have a plan to experiment in order to get product market fit as soon as possible. I'm just going to pause there because that's quite technical. It's quite complicated. Any questions or anything anyone would like to add before I move on? Okay. Cool. This, I don't know if anyone's seen this slide. This is I share this slide just to give people a little bit of a morale boost. because sometimes when you're trying to get product market fit in your business and you're trying to, win new customers and gain traction, it can feel really quite tiring and overwhelming and just a little bit depressing, to be honest. So what this image shows, and it's a lot of them are tech businesses, but I think this also applies to any other type of business. Is it shows three different stages. So you've on the left-hand side, you've got all of these companies, and then you've got a chart between 0 to 5 years on the bottom. And the triangles on this chart show when these businesses first launched their product. And the circle is when they first started to feel product market fit. So they really had that traction. And you can see that some businesses like Canva, I'm sure we're all familiar with Canva. Some businesses like Canva nailed it. They launched their product, they got their first customer, and they got product market fit like super quickly. Whereas other customers, like down the bottom, if you look at what's a good example, Miro, which we're using today, we're going to use soon. They launched their product just after year 1, and it took them to year 4 to 5 to get product market fit. So I guess the lesson I'm trying to teach here is if you feel like it's not easy to acquire customers yet, that's all right. Like it's all you need to do is keep experimenting. You need to keep listening to your customers. You need to keep improving your product. And then over time, you will get that feeling of product market fit and things will become a bit easier. So I just wanted to share that really just for a bit of a morale boost. And maybe from a personal experience, Zebra Growth, we've been trading for 4 years now. And only in 2024 did we get our first signals of product market fit. So prior to 2024, we had been finding it really challenging to win new customers. Whereas in 2024, for the first time, it started to become easier to win new customers. We started to retain customers for a longer time. And it's just because we had refined our proposition over time, and we just found the niche where we were able to add the most value to our customers. Okay, so any questions about product market fit before I move on to the exercise? Nope. Cool. Right. So I'm gonna just explain. You're familiar with using the Miro board? Yeah, cool. All right. So just give me 2 seconds. I'm gonna stop sharing and I'll just open up the Miro board and I'll talk us through what we're gonna do and I'll invite you into it. Okay, so it's the same Miro board that you used in the last 2 sessions, and if you just navigate down to the bottom, I'll share my screen just now as well. 2 seconds. All right. So what's the best way for me to explain this? Do you all just want to look at Zoom and look at my shared screen and I can explain it and then you can hop into the board afterwards? Is that okay? Cool. All right, so what we're going to do is we're kind of moving into the second part of this session. We're going to start to map our ideal investors. So we've created a little bit of a canvas where we can start to put ourselves in our angel investors or whatever it is, put ourselves in their shoes and start to think, what is it they're actually looking for? And how can we create a win-win situation so it makes it easier for investors to invest in our organizations. So what we're going to do is there's 3 parts to this. The first part, which hopefully you can see on my screen here, is we're gonna imagine we are the investor and we're gonna put ourselves in their shoes. So this is called empathy mapping. We're trying to understand what they're looking for. So what we're going to do here is we're going to answer these questions. So the first one is what motivates your ideal investors, and I've put some examples here, which I'm not going to explain just now, just because I want to get everyone started on the exercise. So are they primarily seeking financial returns? Are they looking for more balanced, impactful outcomes? What motivates them? So try and just think what motivates them. Second one is what industries and sectors do you think your ideal investor is investing in? So are they investing in like lots of different sectors, or do you think your ideal investor is investing in your particular part of the market? You're not at this point, you're not going to know all the answers. So this is very much just about you making some assumptions, and it's okay if they're wrong, because I'm going to talk you through how to validate those assumptions. What stage of business do they usually fund? So is it early stage, growth stage, established? What type of traction do they value most? So are they looking for revenue growth? Are they looking for partnerships, social impact metrics? Which companies have they invested in before? So you might have an inclination that there's a similar business to your business that maybe investors have invested in before. So that's a good place to start with that. And then what do they expect in terms of communication and updates? So are they hands-on? Are they hands-off? Do they want regular reports? Do they want milestones? Do they want to be involved in decision making? How active are they? So that's the first part. I'll just explain the second part, which is you're switching from thinking about your investor to thinking about you. So what are your needs? So this is a good brainstorm to answer these questions. So what type of funding do you need? What level of involvement do you want from an investor and why? What areas of your business require the most support? So if an investor can bring extra support, what would it be? What's your wish list? What cultural or mission alignment is critical to you? So is it important that an investor shares the same values, and what does that look like? What's your preferred timeline? So are you looking for quick returns? Are you looking to exit your business, or are you looking for patient capital to realize your mission over the next 25 years? And then what do you think you need to demonstrate to feel ready for investment? So do you need, like, thinking about your business in its current state, do you need more customers? Do you need a more refined pitch? Like, what are you currently missing that would make it easier for you to make yourself ready for investment? So, I'll just pause there. I've created these spaces just to the right-hand side. So what I'd love you to do is jump onto the Miro board, choose one of the canvases, and just get started on those two sections, and then we'll come back together, and then there's a final piece to like pull all this together. Any questions? Okay. I just want to maybe just quickly to set the scene a little bit. There is a method to why we're doing this, and just after we have a short break, once we've finished this exercise, I'm going to explain a case study of a business that I supported to raise £250,000 last month. And I'm going to talk through just how specific we got with outreach to choose our investors. And this exercise was a fundamental part of that process. So there is a reason that we're doing this, if you just bear with me on it. Oh, right. Feel free to get started. If you're stuck navigating to where we are, just shout out and I can help. And I'll put I think I'll put 10 minutes on the clock for this, and if you need more time, we can put more time on. I'll also check in if everyone's flying through it. I can see that a few people haven't managed to make it on the board. If you need help getting on the board, let me know. Otherwise, on my screen, I've left the questions, so feel free to like use a notepad if that's easier. Just, just write down some of your thoughts. That's also fine. But let me know if you need any support. How are we getting on? Do people need the remaining 4 minutes? Wow. What's happening with it?
Sorry, can you put your screen big, please? Because my mirror is not working, so I'm doing it.
Ah,
Thank you.
Cool. Yeah, no worries. Apologies. That's probably about as big as I can get it.
Yeah, it's perfect like that. Thank you.
Perfect. No worries. Yeah, we'll just use the remaining 3 minutes, and then I'll regroup us. Okay. So I'm just going to explain the next part of this, which pulls it all together. So if you're able to just look at the Zoom screen that I'm sharing, that would be amazing. So the final part of this is like, how do we start to like join our needs and our investor needs together, and how can we create that win-win scenario so that we can use this to inform the type of investor and specifically who we're going to reach out to, right? So there's kind of you've got like an outer circle or yeah, square, I guess, here that goes round, and really what you want to do is get some ideas on each of these sections. So the first one is, where do your goals and investor goals intersect? So are there particular shared values? Is there a particular sector, or like yeah, particular thing that you're seeing crossing over? Um, then here you've got, how does your traction align with their expectations? So are you a particular type of business that's going to scale quickly or scale slowly? And just get some ideas down here around like, what are the milestones? How are you going to measure success? Is that crossing over with investors, with this particular type of investor? Down here, we've got, what unique value does your business bring to the investor? So how will your success enhance their portfolio or align with their mission? So the example here is, do you have, for example, proprietary technology and sustainable packaging that fills a gap in an impact investor's portfolio? So you can see a very specific example. And then here, what specific commitments can you offer to build trust? So is there a way that you can share transparent updates? Yeah, etc. So what can you promise to the investor, and what would likely land with them in terms of building trust? And then what you want to try and do in the middle here is how can this partnership create mutual growth? So beyond just financial returns, how does this collaboration that you've plotted on the outside there positively impact you, but also the investor? And that's, yeah, I think like we're probably going to spend about, I think just in the interest of time, I'm probably going to give you about 5 minutes just to familiarize yourself with this and maybe plot one or two sections. And then I'd love to use the last 15 minutes to just talk you through some important stuff. If that's all right. So ideally you would get started on this, but then you can come back to it and finish it if that's okay. All right. Happy to give it a go. Cool. I'll put 5 minutes on the clock, and then we'll come back together to do the last bit of the session. I'll leave this on my screen in case anyone is doing it manually. All right. Um, can you all see my slide deck again? Yeah, cool. So firstly, apologies that's a little bit rushed. I think just because we started the session quite late. It's just felt a little bit rushed. But I've got a suggestion for the last kind of 12, 13 minutes. What I'm planning to do is just run through some more of the theory to kind of round off the kind of takeaways, and then I can stay on. So if anyone needs to leave at 8, cool, just drop off. What I would say before you drop off is I'd love to connect with you all on LinkedIn. So please make sure that you connect with me on LinkedIn. I'll also try and do the same. But if anyone has any questions as I whiz through this theory, feel free to stay on at 8 and I can hang around for 10 minutes and have a bit of a conversation. Um, so um, so ideally, once you've done that exercise in a bit more detail and kind of just had slept on it for a few nights, then ideally you'll understand who your ideal investor type is and how to start to design a win-win relationship that you can take to them. But I guess the question is now what? So what I'm going to run through just now is how do you actually start to approach investors, and what are some tips that I've got to start that process. And I just wanted to ground some of my advice in a case study. So this is an organization called IVI. They are a visual mind mapping tool, very similar to um, I don't know if anyone uses like transcript tools like Otter Pilot or anything like that. But designed for people who are visual learners, and their initial market is people who are neurodiverse that either have ADHD or dyslexia. So equipping them as either students or professionals to be able to manage meetings more effectively and just show up as their true self. So I started working with them about 6 months ago as a kind of fractional marketing director. And some of the points on the left I'll just explain quickly that relate to the takeaways that I'm going to explain. So firstly, they managed to, I need to start saying we because I'm part of the team. So we managed to raise 256,000 in seed funding in 5 months. Just last week, so it's been a bit of a roller coaster, but we just crossed the line last week and managed to successfully secure that, which is great. They managed to be very strategic in their approach, which I'm going to explain. They managed to identify the most likely investors that had the best fit. So there was a huge amount of upfront research instead of the kind of more common, we'll just try any investors that will give us a meeting. We were very specific in how we selected the investors that we wanted to reach out to. And I'll explain some of the tools we use to do that. Personal networks became a really important factor, particularly later on in the fundraise. So over the past 2 months, we actually switched our approach and realized that friends, family, community were a good option for us to reach out to people in our close networks to raise the final piece of investment, and that was really successful. It was people that had been customers previously, people that were friends, family, just colleagues from previous relationships that were super interested in investing because they believed in the team. And then we experimented with messaging and pitching a huge amount. So every time we went into a pitch, we made sure we recorded it, we took the transcript, we used ChatGPT to pull out the insights and the feedback that investors were telling us, and we fed that in to basically a process where every pitch we did, we would optimize the messaging in the emails that we were sending to investors as well as the pitch. So really step one of this is research, and this is something that is often missed. Like this, I'd say this is the biggest thing that holds businesses back from actually raising investment. So first part of this is define your ideal investor profile, which we've started to do. So use this mapping exercise that we've just started to understand who we're looking for. Once you understand that, you want to leverage some useful tools. And the one that really stands out for me the most is Crunchbase. So particularly if it's angel investment that you're looking for, Crunchbase is a tool, so you can go on to, you can create a free account for a certain period of time if you don't want to pay for the account. And you can basically find any investor who is invested in a round of investment with an organization. And what you can start to do is you can plot the kind of interconnectedness between investors. So the approach we took in relation to this, combined with Crunchbase and LinkedIn, for Ivy was we knew that some of the levers we could pull is it's it's a SaaS, well, it's not necessarily, sorry, it's a digital product, it's an app. It's AI, so it uses AI. So that was like a particular lever we could lean into. And also we were looking for investors that ideally had some sort of lived experience of neurodiversity. So we were able to use Crunchbase and LinkedIn to basically plot, okay, what types of investors have invested in neurodiverse solutions? What sort of investors have invested in uh, uh, transcript tools or digital tools, like, for example, Autopilot, or even, investments like Miro that are very digital whiteboard tools? There's a lot of similarities to that compared to Ivy. So we managed to plot these investors, and then basically what we did after that, I'll just see if it's on the next slide. Yep. So what we started to do is we started to build our database. So we done that research on Crunchbase, we extracted that information, got it into a bit of a table. So you could use a spreadsheet or Airtable or Notion, and we just started to like build out the research. So we would get the name of the investor, we would get the firm that they work for, contact details, their preferred industries, funding stages, as well as their main investments that were relevant to us. And then we just started to rank on priority. So what ones out of these make the most sense for us to reach out first and test our messaging? So that was kind of stage two. Step three was, okay, that's actually refine our messaging. So using the research that we had done and the kind of value, the mapping tool that we've just done together, we pulled out what are the key themes that we can put into the message to really capture their attention. So we started with things like, what are the mutual values? What are the potential investments? What are the trends that they maybe care about that we can mention? We then started to frame our value proposition. So like created a section in these outreach emails that showcased how our business actually aligns with their goals and their portfolio and what they're trying to achieve in their lives. And then we personalized, so like very clearly personalized on a one-to-one basis. So we tailored each message to that particular investor so it felt like they were special when we were reaching out to them. And then actually the final thing I would say on here is like, we decided to experiment with, are we asking to pitch or are we maybe asking for feedback? And we tested. So like, did we say, okay, we just clearly want to get in front of you and pitch, or did we tweak the messaging to say, hey, I know you've got like experience in this particular niche that we're working in. I know you've invested in this company previously. I'd really love to get your advice. So like we played around with that messaging as well. And then just a quick one here. This is a bit of a flashback to session one. So what really became important for us is particularly because it was impact investors we were looking at. So they were interested in, solving neurodiversity challenges. Was actually building the story. So like I think Mo covered that some of this stuff with you in session one and session two. So the way this diagram works is from the bottom up. So what really was the most important is how we communicated the systemic problem that we were solving and the reason we existed as an organization. That became really important. And then we just layered everything on top of that. So things like our business model, our financials, our traction, our growth strategies. But actually, the systemic problem was what really hooked these investors. And yeah, basically just to build on that, the investors are not looking for not just looking for numbers, they're looking for narratives. So they're looking to like understand your purpose. They're looking to understand that the problem you're solving really needs to be solved, and you are the right person to solve that problem. And things like that. And this is an important slide. Step 4. So initiate and maintain outreach. Actually, the next few slides are quite important. So trying to build relationships beyond just one email. So so you're going to need to initiate outreach. You're going to need to actually press send on the LinkedIn message or on the email. So you want to this is about pulling it all together. And actually, I'm just going to skip to this slide because this is the one that I meant was important. So what I'm trying to convey here is try to look beyond just the transaction. So try not to see your investor as either they're going to invest or they're not. And if they say no, they're out forever. So what's really important and then like nurturing investor relationships is being really patient and long term with it. So try to stay connected with them. So it might be that you could create a newsletter to share milestones and updates. You might be able to just like check in with them every few months and say, hey, here's some progress we've made. Engage in conversations, so attend events that they're maybe hosting, show interest. And this is much easier to do, right? If you've got a list of 20 investors rather than 500. So you want to keep it quite tight if possible. And then the close. So when the time comes, ensure that you've addressed all of their questions, you've solved all of the blockers to them being able to invest, and provide clear, concise, compelling materials, which we're going to cover in session 5 with the pitch and pitch deck. A few tips. So the process isn't linear. Like stay flexible, take on board feedback, adapt as you can, and try to build like deeper relationships with investors that's beyond just the transaction. And then the bonus tip here, which was actually the turning point for Ivy, the case study that I mentioned in their fundraising journey, is it sounds really easy and really obvious, but actually it was a game changer for us. So even if an investor isn't ready to invest and they say no, try to request if you can keep in touch with them. And the best way that we done that with Ivy was we created an investor newsletter. And every investor who said no to us or not now, we says, would you mind if we keep you up to date on our investor bulletin? And actually about 50, 60,000 pound of the investment that we closed in the past few weeks came from investors who originally said no, but because we kept them up to date and they seen some traction, they then said yes. So that was a really useful way for us to keep people in the loop. Just a simple newsletter or monthly email was really helpful. And that is us. So there's some key insights, takeaways, which I'll not go through, but we'll be sharing this deck with you. So please do have a look at it. There's also a link to, it's not a piece of homework, it's just more some help to help you to build your investor research and begin to shortlist investors. So a little bit of help on that. My biggest takeaway would be to play around with this. So like create a free account on Crunchbase and just start like playing around, like, use the search function to find your particular industry. Go down a bit of a rabbit hole of like what investors have successfully invested in my type of company before, and then just start to plot them on a spreadsheet. Like that would be my starting point. Have a play around with it first. And then just a quick teaser of next session. So Mo is running the next session, and then I'll be running the last session. So next week, we're going to be digging into basically building what we call a go-to ecosystem strategy, but it's really building a go-to-market strategy. So this is much more on the marketing. How do you actually start to build a strategy that will give investors confidence that you know how to build a product that attracts customers and retains customers? So we're going to delve into the marketing stuff, which is one of our kind of core specialities. And that's us. Apologies, we never had much more time for chat. Sorry, it was a little bit rushed because of the late start. But I can hang around for 10 minutes. So if anyone wants to ask questions, please do. Otherwise, I hope you have a nice night.
Thank you, Lee. I am going to make like a tree and leave. Thank you very much for the session today. I've already connected with you on LinkedIn, and when I've finished going through all the exercises, it will be good to get some feedback at a later stage, if that's okay. So I would like to reach out to you for that, if that's all right with you.
Yeah, absolutely. Like what you'll find about Mo and I is like we genuinely do love doing this. So like we're open to follow up. So like if you want to connect on LinkedIn, ask for feedback, you want a sparring partner, like we're within our availability. Like if we're available, we will help as much as we can. So please do.
Okay, amazing. Well, thank you so much. Bye, guys.
Bye bye.
I've got a question, so I'll stick around.
Cool. No worries. Feel free to ask away. I'll stop sharing.
Cool. Yeah, so the kind of question I had was, and it's like, so basically right now we're looking to raise like roughly 50 to 100,000 pounds. Cool.
600.
No, 50 to 100, not 600. 50
to
to
100.
100. Yeah. So in terms of it, right? I mean, so the ideal the ideal kind of like investor profile thing was a bit interesting for me because there's kind of like three different types of investment we can get, right? So obviously you got grants. Previously we've won grants, but we see most of that's dried up or has become really competitive. The second type I was thinking about was kind of like the kind of like basic customers, right? So basically we have like a target customer and then their companies, so like the normally, and we've been going for smaller size companies, but it means that like normally the head honcho might have some cash kicking around that he wants to invest in it, like, you know. And then the third type was, so the third type was basically just what I was saying, which is just like literally go through the list of contacts I have and be like, hey, need some cash. Cool. And then so it's interesting. So like, I mean, it would be great to get you like kind of like taking it because like it feels like we got three different profiles in that sense. And then I mean, but grants we can basically rule out because they're, I mean, we kind of know what we need to do there if we see any that come up, but you have to ask for the right opportunity with the right, and then you have to match it perfectly, which is really hard. So, but we do the two profiles around the kind of like an angel, which is a potential customer, or just like going through your like list of like friends, family, anyone that's ever spoken to you in the last like 2 years.
Yeah. By the way, I love how your angel is a customer. I love how focused that is, right? Because they clearly like they're going to understand your proposition. They've probably experienced your proposition. Well, they have experienced your proposition. Like I love how focused that is, and I love like you could easily test that like relatively easily. So that feels like something that you could test with one or two customers, but maybe like but take, I mean, the real challenge with this is you don't want to alienate customers, so you need to be really sensitive with how you approach that. So for me, I would take much more of an approach of, hey, we're thinking about raising some investment, and actually you came to mind as like, I'd love to get some advice from you on like just understanding, is this the like what would you look for if you were to invest in our business? And actually that could reduce the like that might bring down their guard a little bit, so it doesn't feel like you're asking for investment. It just feels like you wanted to come to them first. So for me, like if I was to choose, I would probably say start there. It feels like a really like that like if you can treat that as feedback sessions and you speak to two or three customers, I think you'll get a lot of great information and you'll be able to validate really quickly, does it feel like our customers would invest? And then for me, I would move on to the contacts afterwards. But there's different ways. I think it also just depends what you're most comfortable with as well. Like where is your heart telling you to start is also
So
important.
I think the one thing in the context is like it's kind of like a one shot in the sense that once you've got the money out of them, like you're done. They're like it feels like the kind of like the emergency card you want to save.
Totally,
Once it's
totally.
get ready. But thank you for that. That was really helpful. Thanks.
Cool. No worries. All right. Well, Yeah,
No
if
problem.
there's no more, if there's, yeah, thanks, David. If there's no more questions, I'll see you in 2 weeks' time, and we'll see you next week.
No worries. All right. See you later. Bye.
All right, take care.